Good afternoon. I'm Brett Wilsey. With me is Chase Wilsey. We're from Wilsey Asset Management. And welcome to today's Smart Investing Daily Briefing. Well, today we're talking about risky debt. Now, this might be something different what you're thinking of. What we're talking about is be aware of investment-grade bonds. What's happening is that companies are taking on debt to buy back their stock, and therefore you might buy this debt thinking, oh, it's investment grade, which is, by the way, triple B or higher, but they might take out more debt and therefore lose a credit rating. So the triple B bonds you got that were investment grade didn't hold that because they took on more debt. And also, we got to point out too about the interest rate risk of bonds as interest rates go up. So be careful of these companies here.
A lot of times people think bonds are so safe. You're taught that a lot in finance. Oh, bonds are so safe. And many times people forget about the interest rate risk. And that is a major risk you take on. Quite simply, when interest rates go up, the value of your bond goes down. Exactly. So don't be, oh my gosh, what happened to the price of my bond? Be a smart investor and understand that. And also, it's just kind of because of the slow economic growth, it seems like these companies are going out and making these outlandish acquisitions and then trying to buy back stock to increase their earnings per share. But again, be a smart investor and understand what your company is doing. And the company that kind of came out with this report was actually Gimme Credit was the name of the firm. And they came out with the 10 most likely company debt to underperform in the short term. And some names on there, big names here: Viacom, Mondelez, and Phillips 66. Just one of the top 3 in the top 10.
Some big names. So a lot of people just look at the name and say, oh, it's safe. No, understand what's going on with that business or that investment that you're making. All right, let's talk about the company today. Hershey Company. Again, we can see right now the current price around 110, the high 117, low 82. You see it was up back in 2014, up again 2015, down, up and down quite a bit. So it could be a good buy because a lot of ups and downs there. Let's look at the numbers and see what's going on with the Hershey Company. Now, they did reject a bid from Mondelez, an offer of $107 per share, about $23 billion. And I think what it is, they want to kind of stay the Hershey Company. They don't want to be bought out. But we look at the numbers, not very exciting. Their sales down 2.8%, earnings falling by 38.8%. I'm thinking maybe they should have taken this offer because not looking very good in the sales and earnings.
Yeah, sales and earnings aren't looking great, but I think the balance sheet looks even more frightening. Look at this current ratio, 0.76. Yeah, that's okay. Debt to equity, though, 311.7%. I'm going to point out this. Long-term debt to equity, 189%. The reason I want to point this out is look at the difference. Debt to equity, that's total debt to equity, to long-term debt to equity. This tells us the company has a ton of short-term debt. What's going to have to happen is they're either going to have to refinance and take on more long-term debt. It's just a scary situation. They should be on one of the top 10 credit-worthy companies you should be concerned about. Also getting that target sell price going out to December 2017, estimated earnings per share of $4.55. Gives a target sell price of $75.08. Well below that offer that Mondelez put out and the current stock price. So while I do love the Hershey chocolate, I'm not loving the Hershey stock.
I was going to say, I love the chocolate, don't love the stock, so I'd say stay away from it. We'll see what happens. That's a very interesting story. All right, so let me ask you if you're happy with the current return on your portfolio, your investments. Maybe you're just not happy with your advisor, not giving you any information or helping you through this difficult time in the market. Well, we've been managing money here successfully for over 30 years at Wilsey Asset Management.
And you want to give us a phone call here. The phone number is 858-546-4306, or you can contact us at our website, smartinvesting2000.com.